Hello, everybody, and welcome. I'm Mike Coe. Welcome to Open Mic. I'm very pleased to be joined today not only by Professor Mark Guthner, who you all know at Rutgers, who is the founder of the digital financial technology lab over there that mines for cryptocurrencies, but also by my good friend and colleague, Dark Side of the Moon, if you know him from X. Scotty, it's great to see you, brother, and great to be having this conversation. How are you?
Doing great. Good to see you, Mike.
Where are you right now?
In Las Vegas.
On the coach.
Enjoying life, man. Living my best life.
That is awesome. So, you know, for people who are new to Scotty, to Dark Side over here, one of the things that I've known him for close to 20 years now, right? I think it's
Yeah, at least.
about that. Yeah. So his background is similar to mine. He actually was in the options business before I was. And he's long been one of these people who looks at the world, tries to figure out not only what's wrong with it, but what can be done about it. And he's actually started several technology businesses to do exactly that. And many of these were really pioneering in their time and in their own unique ways. So I guess for those who don't know you, and for some who might not be as familiar with the cryptocurrency space in general and the Bitcoin complex more specifically, maybe you could just give a little bit of a primer on what got you involved. I assume it was probably the paper or something like that,
Yeah.
and where and how that led you.
Yeah. So 2013, I'm on a flight to Madrid, Spain to take some Banco Santander clients out to a Barcelona Real Madrid game. It was an early flight, and I bought a bunch of computer magazines. And sure enough, in the middle of one of these magazines is the Bitcoin white paper. And, as you know, I had a kind of a deep understanding of algorithms, and being is that we were building algorithms at Dash. And I began to study this white paper. I think I read it 8 times on that flight. And by the time I landed, I had downloaded an app called Local Bitcoin. And I on this app, you kind of pick a random individual that you want to meet on the street, and you exchanged cash for Bitcoin. And so I went to the ATM and I took out the maximum 500 euro let me take out. And I met a random Spaniard outside the hotel in Madrid. And that began my journey down the Bitcoin path.
What was the price of Bitcoin at that time?
I want to speculate a couple $100 at most, if that.
hmm and obviously, some of the people here also know that Mark, you have got you sort of bit and then ended up biting hard. You run miners in your house. You run miners at the university. What sort of led you down that same path?
Well, I have a strong libertarian bend, and I've probably spent 1,000 hours reading materials that are on the Mises.org website and listening to all kinds of podcasts and videos they put out as I would run in my younger days when I used to run a lot. And I always had this idea that, sound money is really important. And I was always frustrated that we have this fiat currency that is prone to inflation. I was that way from a little kid because I was a coin collector. And once they took the silver out of coins, I didn't want to collect coins anymore. It was just like, okay, all this stuff is going to be worthless. They're going to make infinite quantities of these things in copper and nickel, and so forth. So I am a strong believer that money has to hold its value. So that if I get up and go to work and I made enough money to buy a refrigerator by the end of the day, 10 years from now, I should be able to go buy a refrigerator with those same dollars. And by virtue of the fact that you can't, it just tells you we're being robbed and by this unseen force, and I don't like it. So when I discovered Bitcoin, I read the white paper. I'm not as smart as Scott, and I didn't
About that.
understand what it was. And I read it 3 or 4 times, and I'm going, there I had all these questions. Well, how does this work? Now, how does it get a consensus? Why do people believe what's in my database? I was, all these things like that. And then was going to try to go buy some, and all I could find was Mount Gox. And I said to myself, I don't want to be an idiot that sends $1,000 over to Hong Kong and find out I just get a little email back that says, "Thanks for the money, bro." Um, and so I never bought any back when it was really cheap. I installed software on my PC to mine, and I could never really tell if it was really working or not, because I didn't have much horsepower. And I'd let it run for days and days and days and days. And I was doing something called lottery mining or solo mining. And you need a little bit of, you need a lot of luck if you're going to go on your own. But here at the school, what we do is we do our mining activity, and we're part of a pool. And so we get a pro rata share of the computational power we add to that pool. So the kids play with the machines here. At some point, we're going to have enough where the kids can start trading actively to the extent that they want to trade other coins. On the other hand, I'm a Bitcoin maximalist. I basically love Bitcoin and hate everything else. But I'm here to teach, and if kids want to do this other stuff, then I'm happy to go down that road.
Before I get back to Scott on that, I saw an interesting post on X by you. I think it was this morning, or maybe it was late last night. I am one of those people that's looking at X pretty much every single time I'm not looking at something else. Just because I think that's where a lot of smart minds are, and it's where it's just freedom of thought. Whatever's occurring to them at the moment comes out, and I don't have to wait to hear what it is. But one of the things that I saw you post that I thought was really interesting was the concept of original sin. And one of the flaws that you see in the strategic crypto reserve outside of Bitcoin, and maybe you could share that, and then I'd love to hear Scott's thoughts on what you're about to tell us.
Okay, so when the Bitcoin network was started, they had to create a block to get it started, because if you're going to have a blockchain, you need a first one. So that was kind of defined by its software, and then people would do their proof of work, process transactions, and add blocks. So nobody got, in order for you to get a Bitcoin, you had to do some work to get it from day one. And if you basically look at every project since then, they do something called a pre-mine. So the people that develop the protocol, whatever it is, whether it's ETH or ADA or Cosmos, you name the project, they all have what's called a pre-mine, in which the developers allot themselves a tremendous amount of the underlying cryptocurrency that they're creating. So as I recall, I think with ETH, for example, 60% of the maximum quantity was allocated to the people that developed the project, and then they had they had an offering of coins, which they sold for money, and then they had proof of work, and people could earn them after that. But I think that's an original sin. To me, you shouldn't be allocating yourself a mass quantity of of whatever coin of whatever protocol you're kind of developing. It seems dishonest to me, and that's why I don't like it. And the way I kind of think about it is, I've developed this system or this protocol that's going to change the world. In order for me to get there, the first thing you got to do is buy my shitcoin, which is allocated to himself. So anyway, I don't want to go further on that, because my point is it feels like fiat. It's like I'm going to print some money and put it in my pocket.
What do you think, Scott?
Yeah, no, I agree with Mark completely. Look, Bitcoin is decentralized money. It's perfect money, right? Nobody controls it. There is no CEO. We don't have a marketing department. There is no pre-mine, right? The proof of work network is the most secure supercomputer known to mankind. and we can get into that. I think we should get into that in greater detail. And everything else is, for lack of a better description, a small cap stock, and should be viewed as such. They're projects. They're like bottom of the Russell 2000 projects. And look, if you buy a basket of small cap stocks in a booming industry, one or two might work out. But that's not what Bitcoin is. And thank goodness, with the news from the government, that we now have clear differentiation between Bitcoin as a strategic Bitcoin reserve and the rest of the shitcoin world as a what is it, a crypto stockpile, right? So really important differentiation there, and that's an important differentiation. The term strategic Bitcoin reserve and the government acknowledging Bitcoin as a strategic reserve asset, this is a milestone. It was much bigger than anything I had expected. I kind of feel like, as I tweeted out last night, look, I think that, compared to when I got into this in 2013, when, we didn't know, obviously the allure to decentralized money was amazing. I viewed this as, well, I view this as like a Hunt Brothers kind of cornerable asset, right? With a limited supply, and a bunch of hedge funds could get together and run it up, and basically there was no one there to sell it, and you could just, it was a way to make money. What started as a monetary journey has become a spiritual journey for me. I see Bitcoin as something that can save the world. And now with the announcement today or yesterday, look, Bitcoin's never been cheaper on a risk reward basis. The ability to get into Bitcoin at this price without the risk that the government's gonna legalize Bitcoin, seize Bitcoin, like, we're in a new paradigm. We've crossed the Rubicon. I don't think people are early anymore to Bitcoin, but it's about to become too late. And as I tweeted last night, like, I feel like there's a Trump put that's been put under Bitcoin, much like we talked about the Greenspan put back in the day. This game has now changed, right? And I expect really, really big things from not just Bitcoin, but the entire Bitcoin complex going forward.
So you mentioned something there that I think is kind of an interesting thread to pull on, which is that you said you believe it's going to save the world. And I guess my immediate question, and I know that both of you have a very good understanding of, monetary structures around the world, fractional reserve banking and things like this. So I'm curious what you think it's going to save it from, first of all. And then before we get to that, I would also ask the nature of the put that's been introduced to Bitcoin, this de-risking to the complex that's taken place as a result of these policy enactments. I think this is being misunderstood by some. I think some thought, and I think I even heard or read rumors, oh, the government's going to run out and buy 1 million Bitcoin, which was, number one, not structurally feasible in the market without massive disruption and probably unrealistic. But two, that isn't really necessary, really, to essentially give some measure of structure and insurance to the complex, is it?
No, not at all. First, the idea of the put comes from the fact that the asset is now recognized as a strategic reserve asset. That has actual ramifications at the IMF and from a game theory perspective to nation states all over the world. Mm-hmm. And the United States, as the largest voting member at the IMF, right? If you start to consider Bitcoin as a strategic reserve asset, it puts it on par with gold and other currencies and oil and other commodities that are strategic reserve assets. So that alone, I think, provides a put under the price of Bitcoin. Now, as far as how does it save the world, I'll just quickly kind of touch on that. We live in a world with ever-expanding debt. The fractional reserve banking system, the Federal Reserve creates money by creating debt, right? We needed to find an asset that we can invest in that has a compounded annual growth rate greater than the interest rate we're paying or the interest payments we're making on our debt, right? So if you want to fix the balance sheet of the United States of America, right, we need to convert US dollars into Bitcoin, which are going to grow at, let's say, let's just give it a 40% CAGR, which would be low, right? That's going to grow significantly faster than the payments that we're making on the interest rate. Because in the end, we are a twin deficit nation, right? Whether we say we're going to acquire Bitcoin with a balance sheet neutral strategy, okay, fine, it's still debt. Like we're in debt, so ultimately we're using debt to buy Bitcoin, right? That Bitcoin will grow faster than the interest we owe on the debt that we're using to buy Bitcoin, thus beginning to turn around the balance sheet of the United States. And I would suggest to you, Mike, that we don't have to see that change explode. In other words, we don't have to lop off 50% of our debt tomorrow. But if our balance sheet improves by just 5 to 10% over the next 4 years from the acquisition of Bitcoin, the street's going to get it. Congress is going to get it. The world's going to get it. The horse will be out of the barn, and we're going to be off to the races.
Yeah, but if I may add, Mike, it's if we're doing it, it's sort of clearing the world. Other countries are now looking to have a reserve. We've got other states in the United States, individual states, who are thinking about doing a reserve. I think Texas just passed a bill. It hasn't gotten to their governor yet, but their legislature has passed a bill about creating this. I've always wondered when the state of California might buy some for its pension fund. That would give the green light to 50 other states to potentially put it into their to their pension fund. So, I would add that to this Bitcoin put, and the idea that Scott just shared.
So conceptually, for anybody who's watching this either now live or is watching it in the future, I sometimes like to distill some of these concepts down to something that everybody identifies with. And I often like to use, the purchase of a house as an example. I usually use it, as Mark will know, as an example of how we think about leverage on corporate balance sheets and the volatility of the equity in the underlying asset. But in this case, I'd like people to think about it this way. Imagine if you take on $1 million worth of debt and you have some amount of income coming in, and we have inflation, right? So if you have inflation, the value of your debt, the higher the inflation is, the lower the value of your debt, that liability becomes, all else equal. But the impact on your cash flows, the result on your income, is far less certain. Oftentimes what happens, that is, in real terms, in inflationary environments, what you find is that the income, the number goes up, but the value goes down. And the difference here, what Scott is referring to and what Mark just joined in with, is that if you have an asset, an underlying asset on your balance sheet that is at least as good as whatever inflation is, but if the supply is constricted, is arguably going to be growing at a much higher rate. So you can imagine that in a growing population, if there was only a fixed number of houses, the value of any one house goes higher as the demand for it rises. And that asset is the offset on your balance sheet to that liability, your debt. So at a federal level, we don't really have that many assets that we think of other than reserves like gold and now Bitcoin. The quantity of which is fixed or finite or limited. In the case of gold, it's, there is a finite amount of gold on the planet, obviously, but a little bit is mined incrementally. But in the case of Bitcoin, the finite quantity is known, right? So ultimately what ends up happening is that, and this is the important thing, is that the relationship between the entity's debt and its asset starts to swing. And that's essentially how you can return to solvency. Actually, it's kind of ironic because this is kind of what happened to Donald Trump as a real estate guy when the real estate markets collapsed in the 1990s. He went from being a billionaire to being worth, I think at one point somebody said, negative 900 million, and then he swung the other way. And that was the the liabilities remained relatively constant, other than inflationary impacts, but the value of the assets swung around. And in this case, the quantity of the asset is fixed, and whether or not its value is preserved through time is largely what having governments embrace it creates. That's sort of the floor that didn't exist before. It's kind of the way I like to think about it. We also, by the way, have the opportunity to take some questions, but Scott, I was just going to ask you if you had some other thoughts after I kind of dumb it down so that I can understand it, and maybe some others can too.
Yeah, I'm glad you brought up gold, right? My friend Michael Saylor, not my friend, but someone I admire tremendously, he's pointed out that the evil genius strategy, and again, this would be um, budget neutral as per the executive order, is to sell gold and to buy Bitcoin. Look, just for your audience, before Bitcoin existed, so in the early 2000s, and Michael, you'll understand this having come off the options floors, you've come off the options floors jaded towards markets. I think that's a natural net effect of being exposed to um, institutional corruption, if I want to be gentle about it. It's just one of the things that happens to you when you take the other side of professional trades. You become jaded. And I never really got into markets. Like I took my profits and I bought gold and I bought silver. Mark will probably appreciate that. Like I was a gold bug, right? I stacked gold and I stacked silver. And in 2000,
You bought the physical, I remember.
physical, yeah,
Hmm.
and in 2013, by the end of 2013, I was 97% gold and silver and 3% in Bitcoin. Today, I'm 98% Bitcoin and 2% gold and silver because I didn't touch anything. So let that sink in a little bit.
Wow,
Okay.
that's amazing.
Yeah. So
Which, by the way, also for anybody who's watching, you're talking to or listening to somebody who it was kind of a life-changing thing. I mean, in the best possible way.
yeah, well,
Which, yeah,
for sure.
I mean,
You
there
know,
are
but I just,
probably some others where that's also true. But go
one
ahead.
of the things I want to point out is that, as we've seen the gold price rise, and it's kind of been interesting lately, right? Gold shipments moving out of Europe, coming to New York, Trump talking about Fort Knox, like all kinds of little weird stuff going on. Most of us who have been in markets and who understand derivatives really believe that for every ounce of gold that exists, there's probably 300, 500 claims on that ounce. It's been rehypothecated so many times. There's so many derivatives. Gold as a financial layer asset has failed. It failed in 1972. If they try to use it again, it'll fail again, right? The evil genius strategy here is to sell your gold and to buy Bitcoin, especially for nation states, right? First, our enemies have been stacking gold. So if you want to make a play on your enemies, you demonetize their wealth, right? So that's number one. Two, Bitcoin is auditable. It's verifiable. But unlike gold, where you don't know whether you own gold, gold-plated tungsten, claims on gold, like you have no idea. There's no transparency in the gold market. Bitcoin offers you full transparency, right? It's on the blockchain. You can go and look up your wallet. You can see that it's there. It lives on a network. That network is the most secure supercomputer that's ever been created, right? There's no comparing these two assets in any way, shape, or form, right? Gold is a relic of the 20th century and earlier. Bitcoin is digital money, right? You don't take physical possession of your Bitcoin. Your Bitcoin lives on a network. That network is secured by 1% of the world's power. The Bitcoin network uses more power than the US Navy, right? Most people don't understand the proof of work network, right? If you think the US Navy is going to secure the dollar, then you have to understand the Bitcoin network will secure your wealth.
Yeah.
It's permissionless. It's trustless. It's uncensorable. For all of our friends up in Canada, who the truckers came in and the government took their money, what did they turn to? Bitcoin, right? So The problems solved by this new form of digital money are infinite. Like this is the path forward. And the adoption curve of Bitcoin is starting to look like the adoption curve of the good old QR code. I'll ask you guys, when was the first time you saw a QR code in the wild, actually scanning the phone and figuring out going somewhere and doing something?
That's a good question. It's funny how quickly we adapt to new realities, and you start to just use something as if it's always been that way without any meaningful memory of how the world existed before you started to do it.
Exactly.
Although I will say, it's interesting as an example of how financial transaction security plays into it. Consider this, which is, how often does one feel comfortable doing something that we did without thinking before, which is you go to pay for something, like at a restaurant, for example, and you hand them your credit card, and off they go, God knows where with it, right? So now, with skimmers, or they just ticked on the number or whatever, there was always a little bit of fear. And as those kinds of abuses proliferated, so too did our concern about their occurring. Nobody had ever heard of a skimmer when I was a kid. There was no such thing. They literally took down the number. You could write it down, and they took a thing and went like this. It was a hard piece of paper, and it was basically like a virtual check, and they could take that document. They would simply make sure that you had the credit available, and then they would take that document, and effectively what it was a checkbook without any checks in it, right? And some line of credit. And they would have these pieces of paper, and those served as evidence that, in fact, you had been present and you had the credit card in your possession, and then so did they. And then you signed your name on it as if that meant something, right? Just like you signed a check. And then we went to this weird place where we went to digital transactions, but the security around those transactions was extremely limited, and it turns out easily violated. And nowadays, if you're traveling, I know you travel all over the country all the time in your Class A motor coach bus that you and your wife travel around in. I've also traveled across the country, and I can tell you, of course I have anxiety if I whip a credit card out of my wallet and go to a gas pump and dip it in there. I don't want anybody reading that strip, and I'm also concerned about somebody reading it. And I would much rather at all times use transactions where there isn't this uncertainty, all of these different hops that have to take place, and I have to trust each one of them along the way, and I have no way of knowing how they work, and I don't have any visibility on that. And the only way I could be sure is if I essentially created a PO on my side, a little book where I paid attention to every transaction I ever made, and then went back and reconciled every transaction I ever got hit with. And oh, by the way, there are fees. There's fees along the way too. I'm being taxed all along the way. And, we took some of these weaknesses for granted in exchange for the conveniences that they offered us at the time. But people aren't willing to do that anymore. And I think the Canadian trucker example you brought up is a very good one, because that's the thing. Anybody who's had a bank account and seen that the government can, or the bank, can either limit or restrict your access to it, limit or restrict how much money you may withdraw, whether it's at an ATM, who you send it to, how you send it, when you send it. They seem like minor things. ACH transfer. I've got to make a payment for something, and I have to comply with all of these other things, and it goes through all kinds of scrutiny. So everybody is looking over my shoulder, and if somebody comes, if somebody has a big enough thumb on the scale, they can decide that my transaction doesn't happen, or they take a piece of it, or they steal it.
So what you're doing, Mike, is you're without you knowing about it, you're introducing a concept of triple entry accounting. So I do a transaction at a business. They have their books and records, their debits and credits. I have my banks, I got my records, books, debits and credits. But the Bitcoin network is creating a third entry. where anybody can see this. And this would be really valuable for Wall Street. So one of the things that Wall Street loves to do with OTC derivatives is you got one trader that does an OTC transaction at Bank A with Bank B. And lo and behold, at the end of the year, both of those traders are going to have a profit, right? Because there's nothing tying the two together. Both have their models. They do their this or that.
That's a
Both,
great point.
and so they they both get their big bonus. Somewhere down the line, something blows up because you don't have that one solid piece of truth that pulls it together. Bitcoin introduces this concept of triple entry accounting, which is not yet really very well appreciated, but I think is going to be at some point.
To follow up on that, Mark. So what we're really discussing is the other uses of proof of work, right? This
Yeah.
proof of work network, this Bitcoin network that we all think about as just a monetary layer, it has other uses, right? There are use cases, as Mark just described, to inscribe Satoshis that provide a truth layer on top of any transaction. There are use cases, as Jason Lowry, author of the book Software, has proffered that this proof of work network will end up securing cyberspace. I absolutely believe that to be true. And there are use cases in the wild today of people signing essentially cyber transactions, network transactions, with the use of layer 2 technologies. And we should touch on layer 2. Right. So Bitcoin is a layer 1 technology. Bitcoin is the base chain for this network. But there are layer 2 technologies like Lightning. There are layer 3 technologies like Fediments and eCash that make this all come together, that it can do so many things. Right. So think about Bitcoin as the iPhone, but there are a lot of apps that run on the iPhone. Right. This technology is just new. When electricity was invented, right, people thought light bulb. But look what's happened with electricity, right? So all of the apps that come on top of generational technologies are the things that will drive adoption. And I love that Mark pointed that out, because Bitcoin itself, the way traditional Wall Street, to the TradFi world looks at this, it's just this magic internet money. But the reality is, this is a technology layer that's going to change the world, like electricity did.
Yeah, I think that understanding transactional or financial truth and really being able to get that level of transparency, it's not a direct corollary, but I think some of what's going on in Washington right now with Doge sort of highlights what happens when not only you deal with fiat money, and not only you deal with massive amounts of debt and various forms of money printing, but also transactional transparency. What went where, how much, and to whom. Now, whether or not you know the specific identity of the party that sends and the party that receives, we don't even know. There was an interesting story. I think Elon Musk was on Joe Rogan's podcast recently, and he made a comment that Senator Collins had approached him and said that one of the things she had hoped that he would investigate was that she was, part of the Congress and the approval of something like $12 billion that was supposed to be allocated towards the acquisition of new submarines. And, she approached the Department of Defense and said, where are the submarines? No new submarines. Where's the money? Don't know. Not sure what happened to it. Which is really an extraordinary, that's just an extraordinary thing because dollars are simply claims, they're debt claims, and all of us are the ones that owe it. So to simply, it's, the exact same thing like the credit card. There are people in Washington that grab the credit card, and the money just disappears, and you have, in this case, no mechanism to even see what happened to it. Was it one $12 billion transaction that disappeared? Was it 12 billion little ones? When? Where? Nothing. It just disappeared into a black hole, and it's a mystery.
Yeah, well, Bitcoin fixes this, Mike, right? Like,
exactly.
Look, we live in a world where, you got the populace running around screaming about CBDCs. Well, guess what? The USD dollar is basically a CBDC. How many times do you use cash in a week, Mike? Once, twice, maybe? Right? Every transaction we do is pretty much electronic, right? The system's been set up that way. It can all be surveilled. It can all be, put into a database somewhere in a mountain in Utah, right? Ultimately, the system we have today is the government can surveil us. The system we want is a system where we can surveil our government, right? Imagine if our government had a public Bitcoin wallet and all our tax dollars went into this wallet, and we could see every distribution and where it went to. And let's make our government a transparent entity, right? Let's restore the sovereign individual. So there are so many things. When I talked earlier about this, Bitcoin can change the world, I really mean it. Like we're on the verge of transformational technologies, and we have the right people in place to make some significant changes towards real transparency. The solution to these problems is light, right? When we built Dash, right, it was all about let's bring light to a market that had absolutely no transparency, things that made no sense, and we were successful, right? And that product is still successful today. So if you're able to shed light into a world where there is none, wow, it's the best disinfectant that ever existed.
Yeah, I don't want to get into Dash too much, but I do want to share one important thing about that. And that was that, and this is something that Mark is kind of alluding to, the financial markets are remarkably opaque. Even the listed derivatives markets are remarkably opaque. And the simple example I can provide is that at the time there was, I don't know how many exchanges there were at the moment that Dash was initiated, but was probably 8 to 10 or something
14.
like that. It's now
14.
It was already up to 14.
Mm-hmm.
So when I started the business, there were 4. The exchanges ultimately began competing with each other, and then another one, the ISE, came on. And this is, most people who watch this are interested in options. So the ISE was a new electronic options exchange that was going to compete with the conventional exchanges, the Philex, the Cboe, the EMX, and the P-Coast. And quickly, market participants recognized that there was kind of a weird arbitrage that existed. And what was that arbitrage? What they discerned was that any bank or broker that had customers basically needed to be able to take in market data and pay for market data from the exchanges just so that they'd be able to figure out, for example, what the best price was, right? So if you have a product that trades on exchange A, B, C, and D, any bank or broker sort of needs to know what the prices are on exchanges A, B, C, and D, or they cannot confirm that they are providing the best possible price and execution to their customers. Well, we'll call them creative entrepreneurs recognizing this dynamic said, well, wait a minute, we don't have to have a real meaningful exchange business, do we? If we stand up an exchange and start lighting up some markets and get just even a handful of participants, basically the member firms are going to have to subscribe to our data. They're going to have to examine what we're up to. If we have even just the barest minimum, if I do 5% of all of the business in a security, even though I'm irrelevant to the liquidity and maybe even irrelevant to the price, the market participants have to play. They have to buy my product. And suddenly we had this massive proliferation of exchanges. And the exchanges, the big ones, and those that were competitive, started trying to come up with different games to try to make themselves more relevant in this rapid proliferation. So they started coming up with really creative fee schedules. If you do enough business, you trade 1 million contracts with me each month, I won't charge you another dime after that. So that's a big incentive. That was, for example, something that the Philex did. Now, in the midst of all of this, all of the little nuances to the fees, all of the little rebates that took place, all of the payment for order flow that might happen, all of the little pips and pims, the price improvement mechanisms, all of this stuff was going on, and it was all taking place in first milliseconds and then microseconds, and it drove Scott nuts. And it also drove me nuts, but we never talked about it. And one day, he knocked on the door at Cantor Fitzgerald, where I was running derivatives trading, and he literally sang the song that I've been waiting my whole life to hear, which was, what if I could do two things for you? Three, really. One, I can give you the best possible price and the lowest cost. But also, I am going to let you see everything that's happening as and when it happens. Complete transparency. Where's the money going? Where is it coming from in real time? And I will tell you that we did business with Merrill Lynch, and these were questions that sometimes couldn't get answered until 6 months later. The reconciliation in all of these transactions, we would just get a bill or a rebate. We didn't know what was going on. So this is, and the other thing you worked on was cybersecurity. So it's literally, it's the journey that you have taken in the time that I have known you, the decades that I have known you. The themes remain consistent. Transparency, speed, efficiency, and security. And so I guess it's not that surprising, given that background, that that's where we ended up. Maybe we can let me see if there's an interesting. I'll let you guys opine, and I'm going to see if I can find a question in here that I thought might be interesting. Actually, let's just do. Well, someone here is just making a comment. Larry Ripple says Bitcoin is the silver bullet to our corrupt government. It's beautifully playing out. Trump and his administration understands you need something that's irreversible. Take the money printer away. So I want to just say one thing about corrupt governments. I think that, we think of entropy in physics. I think such a thing exists in governments too. I think that the founding fathers of this country understood that some measure of government was necessary, but the most important thing to creating one was to create protections for the people from it. And if you give a motivated group of people enough time and power, they will figure out ways to work their way around the system. It's the natural way of things. It actually works sort of the same way that capitalism does. If they aren't good at their jobs, they're not, whatever their motivations are, they'll probably fall out. But the ones that are truly motivated, they will persist, and they will ultimately become successful. Not one, but it's a system. It's a system that works in that direction. And I think that's a little bit of what's happening. So one person asks, and I'll ask this question first to you, Scott, and then to Mark. Didn't the administration say the reserve would just be what was seized, not newly purchased Bitcoin? Tell us why that does or doesn't matter.
Okay, first of all, that's not true. So they said the reserve would be funded, initially funded with the seized Bitcoin, but they then instructed the Secretary of Commerce and the Secretary of the Treasury, Besant and Lutnick, to go out and explore budget-neutral ways to acquire Bitcoin. That means without using taxpayer budgeted money. So that would be, for instance, potentially tariffs that were taken in. They're not budgeted. Seized assets. Let's say we seize a yacht, right? Maybe we sell that for Bitcoin and put that in the reserve. That could mean swaps, right? We currently own some gold, and we want to sell that and we want to buy Bitcoin. That would not be, that would be a budget neutral event. So the way this executive order was written gave tremendous opportunity for this administration to grow and build a significant strategic Bitcoin reserve. Potentially, I've asked some very smart lawyers in the Twitter community. I said, well, what's the low bar for budget neutral dollars that would be available to purchase Bitcoin? And, I got numbers back in the hundreds of billions. Then you got to remember, we have, when you're talking about budget neutral and we have a $7 trillion budget, there's a lot there. There's a lot there. So I think that no, the answer is that I think the U.S. government's going to be actively purchasing Bitcoin, and I think as these purchases prove successful, the big push is going to be to codify all of this executive order into law and to get Congress on board.
Mark, what do you think?
I'm with Scott. They gave themselves a wide open playing field, and so just because we start at one place doesn't mean we end. You know, we just caught the ball in the end zone. Are we going to stop on the 1 yard line and not run across the along the field? Of course not. They're the government doesn't know how they want to do this, so they're going to do what governments do. They're going to study the idea. Hopefully they bring in, and I think they are bringing in, very bright people who will opine on what to do. My personal bias is since there's Bitcoin and then there's everything else, I hope that if they're going to make this strategic wealth, national wealth fund or something, I don't think that's a good idea. I don't think all these other coins should be part of this. This should just be Bitcoin only. So I am hoping they come to that. I don't want a bunch of Ripple into that thing. These are all fiat creations whose value can go to zero. They have centralized control. Somebody can decide that billion, well, maybe we should increase the potential supply to 100 billion and inflate them away. I think those things are a bad idea. So I think they got a wide open field. I think they're going to come up with something smart, or at least I hope they do.
Yeah, and just to quickly follow up on what Mark said, look, no other nation state is going to take any of these other projects seriously, right? Like any project that's American controlled or controlled by any sovereign entity, as a CEO, can inflate money away, it's not going to be taken seriously. Right, you don't see the sovereign wealth fund of Norway, the sovereign wealth fund of Abu Dhabi buying Ripple. They're not going to buy Ripple, right? They're buying Bitcoin. They're buying IBIT, right? Why? They're buying MicroStrategy. Why? Right? Like, it's obvious, right? Bitcoin is the North Star, right? If gold was our North Star for thousands of years, guess what? It's been replaced. There's a new North Star. It's Bitcoin. It is the premier financial asset that's ever been created.
Yeah, I think the really important thing for people to understand is that the concept of digital money is not what's providing value here at all. Because if it was, then any market participant who is involved in digital monetary transactions right now would be able to basically, cold start their own project, and suddenly that becomes money. The closest thing to it, by the way, of any sort of financial intermediary in the digital space that I can think of, and the closest proxy to it I can imagine, was backed by the dollar, and I'm talking about American Express traveler's checks.
Yeah.
Right? So if you digitize that, is that money? Well, not the way we'd like it to be. That's for sure. Does it serve as it? Yes. It had certain aspects to it that were beneficial. I can still remember first time I went to Europe as a kid, that's what I was given because I was a kid. Yeah. And I could lose money, or I could get robbed or something like that. And this was a mechanism of protection that could be afforded. But it still had all of the intrinsic flaws that the dollar already possessed, and it cost as well, right? So you didn't just get these things for free. The dollar cost you more than $1.
Remember, the biggest problem with the traveler's checks was that they were so easily counterfeited. Right? That's solved by the proof of work network of Bitcoin. Right? Bitcoin is uncounterfeitable. Right? It's verifiable. You can go right on the chain. It lives on this network. So yeah, massive problem with traveler's checks was counterfeit, and that with gold as well. Right? I have a feeling when they go to Fort Knox, they're going to find a lot of tungsten.
Yeah. Well, the funny thing is, my guess is that if they went there, you're not going to have people coring the bricks and then sampling what's inside. Someone's going to go, I mean, under the best of circumstances, could they go and count what they saw, not knowing what it was they were looking at? Even that would be a huge, huge challenge. It's much easier to imagine that the closest that they're ever going to get is somebody opens the vault, and then, like in the movie Goldfinger, they get a peek inside, and then they've got to get out before the door closes. And off you go. There is no meaningful audit that can take place of what's going on in there. The funny thing is, it occurred to me recently, I thought, old pennies, in some ways, might be a more valuable form of metal money than gold, because most people don't know. You see a gold bar, is it really? I've held one in my hands. I think they were worth about $500,000-$600,000 when somebody brought it to the NASDAQ in Times Square, and I was there, and he brought it out of a briefcase, and you could look at it and hold it and feel it. It was gold colored, and it was, rectangular square type shape, and it was really heavy. That's about what I could tell you. It had some markings on it. So was it gold? I have no idea. The good news is about pennies, the copper ones, is that nobody bothered to counterfeit them. So if you had, tons and tons and tons of those things, you'd actually have a greater degree of confidence of what they were actually made out of than if somebody brought you a gold bar, I'd bet. Now, you'd have the massive inconvenience of trying to ferry those things around, melt them down, and then sell the copper to be turned into pipes or wire. But in some ways, you could be more assured of what you were looking at if it was a bunch of copper pennies than you would if it was gold bars. Black Mutt Video says, Mark, is Mike making you sad you stopped your coin collecting? Well, who knew that pennies were going to be worth more than a penny?
Yeah, I'm heartbroken. Yeah.
It would be a little bit, you live close to New York, you live in New Jersey. It would be pretty difficult to store any material amount of wealth in pennies.
Yeah.
And boy, would it be inconvenient, which actually brings up another thing, which I think is really important here, which is the ability to transact with anybody at any time, anywhere around the world, full stop. There is no other mechanism to do this securely. And this was how people got rich in the old days. You would have, people who are essentially the bankers of ancient times who were their own network, right? They were viewed to be a secure network. You could bring gold to a representative of one of these institutions in one part of the world, and they would be able to deliver that value, usually in gold or something similar, on the far end. That was the sort of, and the best you could do was hope you were dealing with somebody you could trust.
Yeah,
it's funny.
The whole banking industry depends on trust. When I first started in the business, it was a very regular routine of 70-year-old people getting their accounts churned by a broker at XYZ company because they handed over to somebody to manage for them. Every aspect of the current financial system requires trust, and that's why compliance inside of these organizations are so huge and powerful now, and expensive, and making life. It's why 2 billion people are unbanked on this planet. It's too expensive to have them as customers, and so Bitcoin lets a lot of people get involved in a banking system where they haven't before. I listened to a podcast of a guy that started the Decred protocol, and he said, I'm going to take Bitcoin, it's going to be proof of work, but we don't want the miners to have all the power. So he somehow created a system where consensus was done with proof of work plus proof of stake. But that's not the point of the story. The point of the story is he set this up for a country in Africa because people didn't trust the banks. And instead of, using whatever the local currency was. They used minutes on their phone to pay for things. So they'd go to the market to buy food or whatever, and then say, I'll give you 45 minutes. And they would transfer minutes off their phone, to the merchant on the other side. So trust is a huge issue.
It's funny you mentioned Africa, Mark. I run spaces on X, and we have one of my favorite accounts, a gentleman from Lagos, Nigeria. He popped up a couple weeks ago, maybe a month ago, on a space I was hosting, and gave a long and just beautiful explanation of what's going on in Nigeria, where they have a significant population of educated youth that are turning to Bitcoin. They're using layer two
Yeah,
for transactions, meaning instant settlement. And Bitcoin adoption in Nigeria is growing at one of the fastest rates anywhere on the planet,
yeah,
right? Because people will get Bitcoin out of necessity far more than they'll get it out of desire,
right.
right? Like one there, I think he was saying that I forget the name of their local currency, but they're almost down to like a sat, which is 100 millionth of a Bitcoin, equaling one of their dollars,
Yeah.
right? Like it's gotten that bad for them there, and they're able to transact using Lightning. The cost of a transaction is a fraction of a penny, right? Like everything about his story was so beautiful. They're using Fediments. I know this is probably for another show, but Fediments is essentially a layer three that sits on top of Lightning, which instantly and seamlessly settles to Bitcoin, to the proof of work network. This technology stack is going to change the way the world does business. The same way TCP/IP changed the way we all live our lives. It's
Communicate.
going to be that big of a deal, right? There's no question in my mind, as a technologist, as someone who's kind of watched technologies grow, hey, look, when we were in high school, Mike, we didn't have cell phones. Well, not to date ourselves, but like we've seen this whole thing go from bag phone to iPhone. You know, like I mentioned the QR code earlier, think of the adoption curve on the QR code. It has been meteoric, right? A little of that helped obviously by COVID. But here in Vegas, you go into a restaurant now, half of them don't have menus, right? You walk in, you scan the QR code, the menu's on your phone,
Yeah.
which is interesting, right? Like, I'm not sure 10 years ago I was using QR codes. So think of how quickly technologies can explode, especially technologies which are beneficial. The Visa MasterCard monopoly is about 50 years old. It's a massive monopoly. I mean, you talk about return on investment and what they've been able to do to get a card in everybody's pocket. It's mind blowing. And just since I brought up Visa MasterCard, I'll share this with you, Mike. There's Gemini Exchange. I think that's the Winklevoss brothers, right? They have a
Mhm.
credit
Yeah,
card
yeah.
now that's paying bonus cash back in Bitcoin. So I got one of their Gemini credit cards, and it's paying 4% cash back for gas or electric charging in Bitcoin. Okay. So I used that credit card. I got 4% cash back on my gas. I then got a fold card, which is a debit card that pays 1.5% cash back on transferring money on ACH. So I pay off my Gemini card with my fold card. I'm now up to 5.5% Bitcoin back on gas purchases.
And what kind of mileage do you get in that motor coach of yours when you drive around?
Well, if it's flat and we have a good tailwind, maybe 7.8, 8 miles a gallon at tops. If it's hilly
No.
and the wind's blowing the wrong way, it gets real ugly real fast.
I think
So
8 sounds ugly to me.
Well, yeah, but of course, the difference is that what are you driving right now, Mark? A
A
Prius?
Prius, yes. I got
Yeah, I
55
don't
miles to the
think
gallon.
somehow the Prius, I'm guessing, is going to have somewhat better mileage than a 40-foot plus long.
Yeah.
45 foot,
Uh,
60,000 pounds, towing, usually at least 6,000 pounds.
Yeah.
Yeah, yeah,
did you say 60
60,000 pounds. Yes, sir.
That's
plus?
ridiculous.
So you are within with the what you're towing. You are within 14,000 pounds of the road limit
Yeah,
in most places.
correct.
No. Um, that's extraordinary. Well, if you decide to, if your wife gets tired of traveling on that, and you end up buying yourself a plane,
No,
your fuel bills are only going to go higher.
that's not
but,
happening. I hate to fly.
but yeah, I'm not crazy about flying either, but the convenience of it is pretty good. One of my son's friends, he has a plane, and we've used it to go to a couple different places. He luckily hasn't asked me to chip in for gas. But the kids had a football game. It was 210 miles away, and he asked me. He said, "Oh, are you going to this away game for the football?" And I said, "Boy, that's a heck of a long drive. I don't know." And he's like, "Well, I'll fly." I didn't know what kind of. I knew he was a pilot. Didn't know what kind of a plane he had or anything. And he said, "Well, I'll fly down." And I mentioned that to my wife, and she was like, "I don't want to get in any kind of a small plane, and this is disastrous." But then I found out it was a jet, and I was like, "Okay, well, sure, why not?" And I said, "I'll chip in." He's like, "Dad, don't worry about that. Just meet me at Signature, and away we go." And I mean, it was just up, down. You can imagine 210 miles, and you just basically right there. Flew back. Another time he said, "Hey, do you want to go down to L.A.? Because I live in the Bay Area. For people who don't know, we'll take the kids to NBC Universal Studios and go out to lunch.
Hmm.
And there's an airport right there in Burbank. So I just literally just park the car, get on his plane, whoop, back. And as cool as could be, too, because if you're techies like we are, it's fun to sit in the right seat of a jet in crowded airspace with the headset on and hear what's going on. It's awesome. Let me see here. We had another question here. Since Bitcoin was created from nothing, I'm going to take issue with the first part of that question already. But since it was created from nothing, what is to prevent someone from creating Bitcoin 2.0, reducing or eliminating the value of, I guess, Bitcoin 1.0? Mark, I'll let you start.
Well, we've already had that. It's called the fork wars. And when Bitcoin first came out, people said, well, 10 minutes is way too long, man, to settle a transaction. And you can only do, I think it was a megabyte of data you could put on a block. So people said we should have bigger blocks and we should have faster processing time. So that's where these things of Bitcoin Cash came out, Bitcoin Gold, and a few other things, which essentially were a duplicate. They take the software, they duplicate it, they take the existing blockchain and duplicate it, but they make a little change in the code that says we're going to settle every 2.5 minutes instead of every 10 minutes, or the block can hold 5 or 4 or 5 megabytes per block, and put it out there and see how people did. And they're there, they exist. Bitcoin Cash exists, but it's not. It just didn't get adoption, mass adoption. And in fact, I would say you'd be nuts to hold Bitcoin Cash, because if you take any of the big miners, Bitcoin Cash, for example, uses SHA-256 as its consensus mechanism. And so does Bitcoin. But the Bitcoin network is 1,000 times bigger. So you could get one big miner that says, I'm going to switch my miners to go mine Bitcoin Cash instead. They would get 70, 80% of the transactions. They could shove through fraudulent transactions. And so I don't even know why anybody would even go someplace else. Small networks are not secure. So by this point in time, the game's been won, and Bitcoin is it. Does that mean it's impossible? Well, of course, everything is possible. That something better can come along. I don't see it, and so it's been tried, and it has failed. Scott?
Scott?
Yeah, it's the nail on the head, right? Like Jason Lowery discusses this subject in software, as I mentioned earlier. We've crossed the Rubicon. The Bitcoin network is so big, it's so strong, it's so powerful. And again, for those that don't understand, as Mark was suggesting, because the network is so big, because there are so many participants, nobody knows who's going to mine the next block. And because nobody has a single clue in the world who's getting the next block, it's not manipulable. You can't put in a phony block, right? Because you don't know, right? It's complete, random who's going to get that block. The brilliance of Satoshi was to build this blockchain, right, which is so secure and secures itself every single day.
Right.
So Bitcoin 10 minutes from now is more secure than Bitcoin is right at this second. Every time that block gets mined, it becomes more secure. Every time somebody adds a watt of power to the network, it becomes more secure, right? We've seen the hash rate has exploded higher. The hash rate, so for people to understand, that means the amount of power being put into the Bitcoin network. As that hash rate explodes higher, the difficulty adjustment goes up. As the difficulty adjustment goes up, it becomes harder to mine the next block, right? So the entire ecosystem was built around the strength of this network. So the entire concept that you'd come along and try to split up the network or try to create a new network and people would jump to it makes absolutely no sense. You would be taking something that's highly secure and moving to something that's much less secure, right? And again, Bitcoin is one thing, right? It's a monetary use case on this proof of work network. But the proof of work network itself is an entirely different thing. And it can be used to secure things like voting, like cyberspace. Like there are tons of use cases that are just now being worked on. Private equity shops like Ego Death Capital are putting tons of money into technologies on the layer 2, on the layer 3. These things are coming, right? This ecosystem is exploding. Much the way the best way I can describe it is TCP in 1998, right? Where were we? We had Prodigy, we had AOL, we had these things. Netscape browser was out there. There was some things on the World Wide Web, but there really weren't apps yet, right? Yeah. Just wait 40 years.
Yeah, I would offer one other thing, which is that so first of all, Mark's point, is he 100% certain? Well, I don't know what we can be 100% certain in, but when it comes to trust and adoption, it's always a relative thing. You have to take whatever is at the top of the stack. You have to take the best of breed, whatever that is. So different people watching this will have different levels of trust. But I would ask them to question the things that they do trust now. And that is to say, just in terms of the monetary aspect alone, how many forms of money have existed since its first use? The first time that somebody used a means of exchange or a store of value, how many have we gone through? And how many have been corrupted? And the short answer to the last question is all of them. All of them have been corrupted in one way or another, eventually. And so what you have to ask yourself is not where do I find my certainty, my 100% certainty? And that's actually not the question you should be asking yourself. It's where do you have the greatest certainty? To the extent that you use anything other than your hands to perform the work for whatever it is you need that day, plant your own lettuce, whatever it is, and then trust that the birds don't come and take whatever you're putting in the ground. I mean, it is always going to have to be that you gravitate to whatever you can have the greatest amount of trust in, whatever you can see to the best of your ability, and which you know by its process is most secure from corruption from outside actors. And I think that really is sort of the core of it. Will we be able to give you 100% certainty in anything? The answer to that is no, because I'm not 100% certain of anything.
I'm
But the question
100% certain of one thing.
What's that?
I will never be richer than Elon Musk.
You know, who knows? You can't say that. You can't say that for sure. There's always some possibility. Look, you know, I think Donald Trump in his first term, he lost something like 40% of his net worth during that period, and he was under a significant amount of pressure thereafter. And it looks like the same thing's happening to Elon Musk this time.
Mm-hmm.
And this is an interesting point I would make. I'm not telling people which way they should lean politically, except that I will say collectivism is a complete disaster for human history, so you should avoid it at all costs. But other than making that blanket statement and your interpretation of that and how you think it ought to be applied, consider this. For anybody who thinks that Elon Musk went into government work to make himself a richer person, when the richest people do this, they rarely get richer.
Yeah.
And he has not. He has gotten materially poorer. People are deciding they don't want to buy Teslas, and they're sabotaging the lots where they reside. It's a risk that he took, and he almost certainly took it for reasons other than enriching himself. So, Mark, to your point, he has a lot more enemies now than he had before he decided to pivot his political stance,
of course,
and try to make a stand. And because of that, it's not just about how quickly you're able to elevate your own wealth, but it's also a little bit about how well he can maintain his own.
Well, I think that would be
He's got a big head start.
Yeah, that's a billion standard deviation event. So,
well, we're closing in on the on an hour and 15 minutes here, and I would actually I want us to take a longer time, but I know that you probably have a class coming up, Mark, and as it happens, I'm going to be on Fast Money for the full hour from 5 to 6 today on CNBC, and I'm going to have to do a little bit of preparation for that, and we'll have to cut this one short. But I really hope that we get Dark Side back so we can have these kinds of conversations, and that those who end up watching this, a recorded version of it, that you put your questions in the chat, and we will use that to sort of frame what our next conversation could be about, and maybe we'll get some more voices in here as well. But this was great, brother. It's great to see you, and it's great to talk to you, and I always love your insights.
Likewise. Thanks so much for the kind words, Mike. Really enjoyed it. Mark, it's great to see you again. Look forward to doing it again soon, guys.
Yep, we're here. We'd love to do it. See you now.
Have a great weekend. Everybody who tuned in for this and all of those who are going to watch this later, thanks so much for watching. We'll see you next time.
Woohoo!